Hello traders and investors, welcome back to the Trend Trader channel. So as promised in the previous week, we said that we are going to come back to Kat's question. So Kat requested that we cover these companies. Kat requested that we cover Absa, Afrimat, MTN, Shoprite, and Transaction Capital. But in addition to these names that Kate requested, we're also going to be covering companies such as Hulamin, Stadio, Tsogo, and then we'll also look at the JSE Top 40. In addition to these companies. So if you have some questions or you have companies that would like us to cover, just feel free to write there in the comment sections. We do read all the comments and we respond to everyone that comment on the YouTube channel. And if you haven't subscribed, please consider subscribing. And if you find value in this video, please consider liking this video and sharing it with as many people as possible. Now let's look at the chart. So before we start, let's just look at the JSE Top 40. If you missed the video that we released where we were talking about, I'm just trying to think what we were talking about, where we were talking about Sibanye. So we mentioned that the JSE Top 40 has been nice there on an uptrend until it reached 70,000 point before it started to pull back to this previous resistance level. So this previous resistance level behaved as a support level. But last week we saw the share price dropping below this support level there, then indicating that at the moment the general market is a bit late. So where we're looking at the market, we're looking at this level, so waiting to see if the market is going to drop and come to the 55,000 point level. Remember, if you can trade this through the JSE, not the JSE, through the Satrix Top 40 or any Top 40 tracking ETF, you can track you can trade this Top 40. So if the value of this top 40 index continue to fall, then we can expect all the top 40 ETF to come back and have a net asset value of about 55 Rand per ETF. It doesn't matter which ETF you are using. I prefer to use the Satrix Top 40 because of the 0.1% total expense ratio, but that is just my personal preference. At this moment, we see this weakness, so I wouldn't be buying more of these ETFs until I see whether the value of the ETF continue to trade above that 65 Rand net asset value, or it comes to 55. Even when it comes to 55 there, I will wait to see if there is going to be a bounce, meaning that the value of the ETF will be going up, or if then it will go lower. Remember, it can only go lower if the market continues to be weak. Then it will mean that we will be in a bearish market, and once we're in a bearish market, it is not advisable that we continue to buy more stocks. You can always wait for the market to recover before you pump in more money into your stock portfolio. I understand that there are people that believe that they should always buy the dip. I wouldn't advise that, but remember, this is not a financial advice. It is just my opinion. Okay, so we can already see that the market is a bit weakness. So since the general market is weak, then we are going to be a bit skeptical on some setups, especially long setups. As mentioned in the Sibanye video, we saw that the more we tried to buy some of the US companies, it was easy for us for the stop loss to be triggered because the general market is weak. But some of the trades were working, as you will see that with one of the companies that will cover that, they are still nice on an uptrend. They are breaking to higher levels, meaning that they are giving us buy signals despite the weak market. Okay, so now let's start with Absa. Absa is one of the weak companies that we see there in the JSE. So the share code for Absa is ABG, but you can just type Absa, then you will still get the full name popping there of Absa. So now Absa, we can see that it's back to this previous level, similar chart to the JSE Top 40. So we can make the same argument. We are either waiting to see Absa rejecting prices below 157. Let me try to get rid of that thing that is showing the calendar. Yes. So now we can either wait for Absa to come and trade above 158, 159 there, then that will show us that there is a recovery on the price of Absa. Otherwise, if Absa drops below 156, then we can expect Absa to come anywhere around 135 or even somewhere around this. So between 130 and 135, that's the potential path that Absa can take. Remember, whenever we are trading probabilities. We're not saying that Absa is going to crash. We are simply saying that based on current price action, we can expect one of two scenarios. We saw that Absa, they've been paying dividends, which is good. We saw the company has been profitable. But remember, whenever we are buying shares based on the share price. We can also look into the fundamentals of the business, but we shouldn't just throw money in a stock that is in a downtrend. So personally, I would wait for Absa to see if it finds support here and then it goes down. But I must say that in the past week, I was shorting Absa when that share price was going down. I was busy selling. Short selling is different to just logging into my stock brokerage account and selling the shares that I own. I don't have Absa in my portfolio, but I was borrowing the shares from my broker and selling them and then buying them at a lower price. That's another practice that traders can use, but it does require a bit of experience. It carries some risk. Remember, just because the share price is performing poorly doesn't mean that the business is going to stop paying dividend. If the business continue to pay dividend, then the broker is entitled to take the dividend amount from your account. So like I said, the scenario here on Absa is that the share price can find support around 158 and push the way up there, or it can then just fall to somewhere below 140 rand per share. So it's better to just wait and see which scenario plays out, because there's no point buying the shares at 158 when you are still expecting the shares to drop to 140 region, because you are definitely going to lose a bit of money there. So it's not something that I would want to do in my portfolio. Ideally, I prefer that the share price, it falls, then it starts to consolidate, and then once I see that the share price is starting to show signs of recovery and then it's starting to break the previous resistance, then that tells me that that market is ready to go up. I don't want to keep on buying a company that it goes down, it consolidate, it break lower, I buy, it comes to another level, it consolidate, it break lower, I buy. That's the easiest way of losing money in the market. I will never encourage anyone to do that, because you are not going to make money there. You can think that you are getting more shares, but at the end of the day, you are just losing money. And if you think that the share price or the share price cannot go lower, remember that Avenge didn't just started trading at 1 cent per share. It kept on falling, and there were some people that kept on buying. So you really need to be careful there whenever you are buying and selling shares in the stock market. So that's it with Absa. Then now when we look at Afrimat is still positive. We mentioned in some of the past videos that the share price was moving nicely higher there, but you can see recently we are just seeing the same thing. So we bought Afrimat when it broke above this level. Remember, that level was the previous resistance level there. So when the share price broke above this level, so we were excited. So now we see that it's coming back to retest this level. At the moment, the share price is still above a key moving average that we use to determine whether we should buy or sell a security. So what we're waiting to see here, we would like to see the share price rejecting the lower prices here, maybe just to get something that looks like a pin bar. Then if the share price continue to push up there, then we will be happy with our position, but we won't just buy the dip here. We're actually going to wait to buy a breakout somewhere above 72 rand. We already have a decent position here, so buying here, the reason why we prefer not to buy the dip at this moment, we mentioned that the general market is weaker. So whenever we try to buy a dip in a weak market, it's possible that the dip can keep on dipping. But if the share price break above 72 rand per share, that will tell us that Afrimat actually has strength to continue to move further up. So that is why we prefer in this case to wait until there's that breakout there. But if we were in a bullish market, if the JSE Top 40 was moving up, then we will just happily buy that dip and actually take a swing trade. As you can see, we mentioned that it's a it's coming back to retest the previous resistance level there. If we were in a bull market, we're going to buy the dip and then have a stop loss somewhere below that retest level, and then have our target here at the previous top there. That's another way to trade the market, because then whenever you play that card, you are just anticipating that the share price is going to go up there. And then one of the reasons why we do swing trading in our portfolio, that help us to create a bit of a cash flow, because we are able to generate that quick profit. Well, not necessarily quick that it happens so swift, but whenever the risk to reward, it's like, say, maybe 1:3, and that trade works out, then we know that we've made money in our portfolio. That can happen in weeks or months. So by quick, we are not saying that it's something that just happens swiftly. So in terms of Afrimat, we're not going to buy the dip. We're just going to wait for that break up or break out above that 72 region there, because as long as it's showing weakness, it's also possible that the share price can actually break below this support level and then go to the 48 rand region. So we're not going to take that risk. It's based on experience. We've been trying that. The US market has been the weak market, and we've been trying to buy some dips, but they have been failing. So it's based on that experience. Okay, so now let's look at Shoprite. Shoprite is still the biggest position in our portfolio. Obviously, we like the company, but it's not based on the fact that we like the company. The reason is simple. The share price has had a nice bull run, coming all the way from somewhere below 94 rand. That is when we started buying Shoprite shares, when it broke above this level here around 100 and something. As you can see, we saw that it broke above this level, then it came back to retest that level. The JSE was in a bullish market, so we were confident when we added the shares here, and then the share price, it continued to push up, coming to break above this level. When it broke above this level, we bought more shares. Again, it came back to retest this level. We've been buying Shoprite shares. At some point I tweeted that for us, it's difficult to have 100% plus return on our positions, because every time we get a buy signal, we keep on buying, and each buy we basically averaging up. Even if the share price continue to move up, our returns are not that high in terms of percentage, because remember, if you buy at 160 and the share price goes to 180, it's still not a significant move compared to if you just bought at 8 rand per share and then it goes to 160. Then there we will have a 100% return. But what we are getting a maximum profit, because we'll be carrying a large position. Whenever the company pays a dividend, we are able to get a big dividend from that a large position that we have there. So at this moment, we are looking at this level. This is our level of interest. We are waiting to see how Shoprite is going to behave around this level. You can already see that this candle is large. Also, this week trading volume is also a bit large. Once again, we would like to wait and see if there's going to be a support here. Then the lower price are rejected. Then we are going to wait and see. Anywhere around this region, we'll be interested to see Shoprite coming back above this level. That is the only way that we will be buying. We already have a position, so we will not be buying more shares until this scenario plays out. Once again, like anything that at this moment, if the bearish market is going to happen, you can see that this downward scenario is always going to be there. If it happens, then we are ready to sell our shares anywhere around 205, 200 rand per share, because we've already pocketed all that profit on the way up there. So at this moment, we are not buying or selling Shoprite. We are just waiting to see how the market is going to behave. Okay, then the other company that Kate requested is Transaction Capital. Transaction Capital, we like the company. It's also profitable. We know that they are big in the used car space. They own SA Tax. SA Tax is funding the taxi business. If you are South African, you will know that the tax industry is one of the busiest industry. People are using taxis almost every day. So what we saw that it was a nice uptrend there, but now we bought some shares when the price attempted to break above this resistance level. That position has quickly reversed. We closed the recent position because that was just a swing trade. We closed this position for a loss. We do have losses in our account. We don't always make money. It's not just us preferring to make money in the market. It's actually the market that is making that money available to us. So at this moment, we are waiting to see what happens here at 42.50. I just want to try and draw a proper level. We want to see if it's going to come and retest 42.50, but we also want to see what happens somewhere around 40 rand per share. But if the share price starts to trade below 40 rand per share, then we will have to exit our position, because even though there is this support level somewhere around 38 rand, we don't want to sit and keep on watching the share price falling, coming back to all these levels. Because remember, the market, if we're looking for a scenario that the share price go down and then it consolidate and then it starts to break above this level, we trade that. Then the opposite is that for us to sell, we can look at the market that it goes up, then it starts to distribute there. Once it does that distribution, the share price can fall below the support level. This is the opposite of buying. So whenever we see this, we make sure that we exit our positions there. So if a transaction capital comes to this level and then maybe it breaks below, retest, then we expect the share price to go lower. Trading is not that difficult. Whenever we trade, we are just looking at repetitive patterns. We've seen the pattern before. We saw how it played out. Then whenever we see that a pattern once again, we just follow, or we expect it to continue to act or to behave the way that it has behaved in the past. If you look at the chart, you're looking at a moving average or support and resistance, you expect certain price action around that area. That means that other market participants are also planning to trade around that level, and that's the reason why the market, or that is the reason why technical analysis work. It's just the market participants behavior and how people react around those levels. It's not that complicated. It's not that deep, Bafwetu. Okay, so at this moment, like I said, we are waiting to see if this stock transaction capital come to around 42.50 and then it finds support there. We will be happy to continue to keep our shares. The shares that we have on transaction capital are on our investing account. We have positions that we try to keep for long term, but we don't keep those companies just because we love those companies. We only keep those companies as long as the share price it goes up. Once the share price starts to go lower, then we exit those companies. There's no need to be loyal into a company, especially if the company is no longer paying you dividends, or the share price is not paying you. Our important thing is capital appreciation, not dividend. So we don't keep companies because they continue to pay dividends, right? So now enough with the negative. Let's try to look for potential buy signals. But remember, keep in mind that the general market is weak, so it's possible that some of these buys can quickly fail because of that general market weakness. So the stock that we are looking to buy this week is Hulamin. We've covered Hulamin before. So the share price is currently trading at 4 rand 98 cent. Then you look at this consolidation level there that has been happening. Then we saw last week the share price it broke above this level, even though that volume is not that large compared to the previous week's volume. But you can see that the previous week the buyers, they really pushed that price up there. And also we noted that the JSE Top 40 actually closed in red last week, so we are not surprised to see a smaller bullish volume there. So we're still going to take a trade on this position. On Hulamin, we have a buy stop order, and our stop loss is just below this breakout level. We're not going to have a stop loss around here, because then if you have that white stop, we're going to put ourselves in the position that if the share price it comes back to this level, it can come back to retest 3 rand 60 per share. Then we don't want to be sitting with a losing stock there. Even if the share price does recover there, our capital is just going to be tied in a losing position. And then the worst case scenario, of course, is that if the share price comes back to this breaking range and it does not find support there, it can actually fall there, and most likely it can come to around to rand 8 region. So this is why we say that we have our stop loss just somewhere around 450 per share, because we do not want to waste time in the market. Remember, time is money, so we wouldn't want to waste our time holding on to losing position. But this is the stock that we are adding into our portfolio this week. We are adding it into our long-term portfolio. So maybe because we are going to add this stock into our long-term portfolio, maybe we should just give you some brief information on Hulamin, what the company does. But just because you know something about the company does not guarantee you that that company is going to be profitable. It happens that you have a useless piece of information that doesn't help you. The point is, you shouldn't stick to a company just because you know a thing or two about that particular company. But in short, we can see that the stock trades about 86,000 shares, so it's not a high liquid shares. If you're using EasyEquities, it's possible that there are going to be limitations on how much you can invest in this company. So let's say, for example, you want to invest 5,000 rand and there's a limitation of 1,000 rand per transaction. It means that you'll have to take 5 transactions. We haven't made the trade, but we will see once we log in onto our EasyEquities account, because that is where we're going to be buying this company. Then we can see the average volume, it's about 400,000. So it's nice, we see that it's a liquid company there, even though we would have preferred the average volume to be over 1 million, but that is the average volume for the past 10 days. So it's about 400,000. We look at the market capitalization, it's a 1.7 billion company there. It is not paying a dividend yield, so well, it's not a great company. But remember, our decision is not based on the dividend yield. In the description, we're gonna link a video that we made in one of our channels. The channel used to be called Mzansi Investor, but we have rebranded the channel because it will no longer cover financial education content. But we're just gonna leave the link there because the video is still there, it's available. We speak about why we don't always use the dividend yield whenever we want to buy a decision, because just because a company has a good dividend yield, it doesn't mean that the share price is going to act right, or just because the company has a 0% dividend yield doesn't mean that we have to skip that stock. Obviously, the best case scenario is that we buy a company that can appreciate in value, but it can also pay us dividends while we are holding that position. Then when we look at this short income statement there, we can see the revenue, it's been trying to grow, then it went down a bit in 2020. We see the revenue, it was about 8.55 billion, and the revenue in 2021 it increased back to 13 billion, and the net income was just below 600 million, with the profit margin of 4.5%. but in 2020 the profit margin was minus 2.8%. so we can say that there is positive, these are positive news. The stock is trying to recover a bit. We're not going to focus on this because that is just other people's opinion on whether the stock is a buy or a sell. We need to make our own decision. But if you want to understand what Hulamin does, so it's a holding company that manufacture and market rolled, semi-fabricated and fabricated aluminum product. That is why the name is Hulamin. They are working mostly with aluminum product, but you can go to that Hulamin website there so that you can find more information on the company. Then you can see what they are doing there. So it seems like they have a lot of things, interesting things that are going in. I'm from KZN. I know that in Maritzburg they have that Hulamin factory, and it employs a lot of people in that region where they are based. Well, recently KZN has experienced those floods. I don't know how this company has been affected by the floods, but remember, that is just for your own piece of information. Whether it's useful or useless, that is very much up to you. Then the next company that we covered previously was Stadio. Stadio, it's a private education stock. There we can see that it's nice. It is on an uptrend. We bought Stadio when it broke above this level, and Stadio is going to start to pay dividend. We've actually received that dividend in the past few weeks, so now we are happy that Stadio is profitable and starting to reward shareholders. Also, when you look at this level, we first bought when it broke above this level. It had a nice decent amount of volume there, and then we added our position when it broke above this level. So what we see here is that it was a breakout and the retest. So now we see the price is above that level where we bought. We're not going to buy more shares at this moment. We're just waiting to see. But if you don't have a position yet, the stock is still at an area of value. You can buy at the current share price of 4 rand and then have your stop loss somewhere around 350. You can even have the stop loss at 350, then anticipating that the share price is going to rise there. But then again, remember, the general market is currently weak. This breakout can easily fail. In a normal bull market, you can just buy these stocks comfortably, because I mean, the market is bullish. People are buying stocks, even though there will be other companies maybe people will prefer over Stadio, but at least we are buying at the back of a bull market. Okay, then lastly, I want us to look at TSG. TSG is Tsogo Gaming. It's another company that has been trying to recover. Initially, it had a nice momentum that was pushing, but when you look at it now, it's starting to move sideways. The momentum is dying a bit there. We saw that it attempted to break above this level 2 times without success. So we're waiting to see. It's currently at around 11.52 per share. So waiting to see if the stock is going to break above 12 rand per share. But ideally, it's better to wait maybe to see if it starts to trade above 13 rand per share. Then, because it will mean that it has successfully crossed this resistance level. But on our portfolio, we already have a position on TSG. It's not a big position because it's a small company. Well, it's not a small company, but it's not a company that you can just easily dump a lot of money into that. So once the share price starts to trade above 13 rand per share, then we can increase our position there. Again, we'll be expecting the share price to continue to go up. For us, we've been trading for quite a number of years now. When we say that we are going to wait, we literally mean that we are going to wait. We know that some people, they will just watch a video and just want to quickly jump in. The reason why we don't just jump into companies is because we know these chart patterns, they fail. And if they fail, you end up sitting on a loss. So now people are going to start saying, yeah, but we saw that somebody was buying this company, but it's not moving. What should I do? Remember, you are still responsible for your account. Whatever we share on our YouTube channel, it's not financial advice. We are simply sharing some of the positions that we are taking. We are also responding to what the viewers and subscribers are asking us. We are not telling people to buy particular companies, right? So yeah, we are going to wait to see TSG or Tsogo Gaming trading above 13 rand per share before we buy those more shares into our portfolio there. So that's it that I wanted to share with you today. Remember, we were responding to Kat's a request for some of these companies. We will have a separate video this week in the US companies. We've got companies like Palantir, PST, Peloton, Sophie, Roblox. They're going to be releasing earnings, so we'll be making a separate video to cover those videos. So if you are interested in that video, make sure that you subscribe, so that once we upload that video as well, you don't miss that analysis. But those companies are just bearish. We are not expecting anything exciting from those companies, but we'll also make a separate video to show you some of the bullish companies that we are buying in our USD account. Either those companies, we are buying them on our EasyEquities USD account, or we are buying them on eToro, because we also use eToro to buy the US companies. Once again, if you haven't subscribed, please consider subscribing. If you found this video useful, please consider liking and sharing that video. just smash that like button. And then if you have any questions, comment, suggestions, please make sure that you leave them in the comment section, then we will attend to them. Then once again, thank you. I will see you in the next video.